Welcome to the Chicago Traders Expo. Isn't this a wonderful show? I love it. And the Traders Pendulum, the 10 Habits of Highly Successful Traders. This is a book that I've written, so I'm going to share parts of the book with you. I wrote this at the end of, it was published by Wiley at the end of 2015. All of the concepts in this book are applicable today. It's good for traders just starting out to set up your trading businesses. It's also good for traders who have been doing it for a while. I've had positive feedback from both sets of traders. So my name is Jody Samuels, and I've been trading the markets for a very long time. So that's why I decided to write a book and put my lifelong trading experience in this book. For those of you who may know from reading the bio, I started trading on Wall Street for an investment bank in currencies in 1980. I used to say for over 30 years, then I used to say for over 35 years. Why don't we be honest and say since 1980? So I'm being honest. All right, hopefully today you'll take away some of the key habits that I feel that you need to succeed trading the markets. And this is the Forex stream, but really trading any market. So I already spoke about my book. You can purchase it on Amazon, the Wiley website, or maybe your local bookstore. I don't know, it's a nice book. Let's talk about the Trader's Pendulum. So imagine a pendulum going back and forth, back and forth, back and forth. In the market, we have to deal with three types of pendulums: the market pendulum, the financial pendulum, and the emotional pendulum. These are the market swings. So at some point, we go to one extreme, and then we go to another extreme, and then what happens with the pendulum? It settles, right? It stops moving. So successful traders know how they've learned how to trade the market pendulums. And when you're first starting out, you might get caught up in the market hype and get very excited, get excited by the market movement, and get excited, who knows, you will have rushes when the market is very volatile. How many of you have experienced the market hype in that sense, where you have literally experienced the emotional pendulum swings of the market? Yeah? Yeah, some of you have raised your hand, yeah. So what's the market pendulum about? The market pendulum, I like to discuss that in the context of the market cycles. That's actually my expertise, Elliott wave analysis. So I'm always doing a top-down approach of the markets, looking at the market cycles. What can a market do? It can go up in an uptrend, down in a downtrend, or sideways in a consolidation phase. And that's really what we need to decide as traders, how to trade those market cycles. How do you know when we're in an uptrend? And you all know the definition of an uptrend: higher highs and higher lows, but where do you get in? And where do you get out if you're wrong? These are all questions that traders have. So the market pendulum is about not buying when at the top of the, when the market has moved up a lot. Even though they say the trend is your friend, and way back when, like in the 80s and the 90s, when we did have huge trends in the markets, you could literally buy after it moved up 1 or 2 or 3% and still make money. Now the markets are more mature, especially Forex. So they're more sophisticated. There are a whole lot of more players in the market. The market has grown trillions in a day. And it's not so easy to buy once the market has moved up. You want to buy on the retracements, on the pullbacks. So that's the market pendulum, looking at the market swings and understanding when to buy, when we are in a true trend, and how to trade that trend, to buy in the dips. The financial pendulum is about making profits and making losses. So in order to trade, you've got to be able to take losses. And you've got to be able to manage your risk and take losses. And when you speak to long-term successful traders, if you read books like The Market Wizards, like any of the books that were written about famous traders, you see one consistent comment from a thread from all of them, which is to say, you know, if they were asked, well, what is the key thing that you want to, you know, tell new traders, or what, you know, what did you have to focus on? They would always say, I focused on my losses. Because when you keep your losses small and your profits bigger than your losses, that's when you can make money. So it really doesn't matter if you have a string of losses, as long as the losses are kept really small. That's called drawdown. But if you have a big loss and then another big loss and another big loss, and you're not managing those losses, well, you can wipe out your account, especially in Forex because of the leverage factor. How many of you have wiped out your accounts in trading Forex? I know, you don't want to admit it, and that's fine. But, so that's fine. I'd like to think that you've learned and you've been taught really well. So kudos to you. So the financial pendulum also has to do with our ability to, our longevity, the ability to continue in the market. We've got to learn how to take those losses, and we've got to learn how to manage those profits. More on that later. Emotional pendulum, all about the emotional swings. So for example, fear versus greed, calm versus nervous, self-doubting versus overconfident, cautious versus reckless trading, you know, being really overconfident and taking a huge position because you just know it's going to be right without really planning out your trade. How many people have done that? Yeah, most of you. Yeah, thinking that nothing can go wrong. You made 3 wins in a row. Nothing can go wrong. How many of you felt that nothing can go wrong? This is really simple. Yes, it's very common. You're not alone. And that's the, trust me, I've experienced all of this, by the way. Like I talk about my roller coaster ride days in the 80s, trading. I mean, it was really, for me, it was an emotional roller coaster, no kidding. So my life's work has been to manage that pendulum swing on my emotions. And that's why I wrote the book, because I believe that developing habits is a way to manage those emotions. Developing habits are the tools that you need to manage those emotional swings. I was right in there. With my, you know, at that time I mean, right in there getting calls all night long when I would leave levels with London and Singapore, and I would say, call me at this level. You know, half the time they'd call me, I didn't do anything anyway. I think I was just, you know, I don't know why I even bothered to have them make the calls. What was that going to do for me when I'm sleeping? It's only going to wake up my husband, and it's going to, you know, keep me up for the rest of the night, right? When I had to go into work the next day. Anyway, I had to learn too. Organized versus disorganized, flexible versus stubborn. These are all the emotional pendulum swings that we go through when trading. And the book has a lot of these examples, and you'll probably be able to relate to it. But most of it falls on the fear and greed continuum. On the fear side, you're afraid to take positions because you've had a series of losses. On the greed side, you've had a series of profits and nothing can go wrong. So we want to be somewhere in the middle. It's like a seesaw. When you're a little kid, or you have kids, or you have grandkids, and they're on the seesaw, you want to sort of be at the fulcrum of that seesaw. You don't want to be, right? That's the best way I can to describe it. And it takes work. It takes work on ourselves to get there. You know, to be almost, I don't even know if this is a word. It probably isn't. It's not a word. Emotionless, like just without emotion, right? Void of emotion. Objective. Yeah, totally objective, exactly. Right. So, you know, you get the point. That's the emotional pendulum. So, the book is about the technical trader's trap, and it's a nice little story about, actually I use different names in the book, but take Farrah and Fred, those are our technical junkies. Those are our traders who are always on the lookout for another strategy, another this, another that, another the next guru, the next holy grail, just the next best thing in trading. So they're out of shape. They don't have a business plan. They're not making money consistently. They lack discipline. They trade emotionally with no trading plan. This is so typical. How many of you have been through that sort of yo-yo, going back and forth and looking around, keep on looking for something better than what you already have, right? Yeah, all of you have experienced it. And that's fine, but you know what? I'm very honest with traders. I offer, free 30-minute coaching sessions with people, and just because I like to speak to traders, I like to speak to traders. I like to be here. I like to talk to you. I just enjoy it. And one thing that, when a trader tells me that they've just spent, $5,000 on a course or a system, and they're like, I can see that they're looking for something else, I just probe a little bit, and I talk to them about the system, and what is it about that they liked, and what are they doing well with it, and what aren't they doing well with it, and I just say to them, you don't want to buy my course. You spent the money. Now it's about you learning how to work that system. You liked it when you bought it. It's about you, because trading is really a mirror image of ourselves. What we do in trading is really how we show up in our personal lives. How many of you have evolved to a point of understanding that? Good. A lot of you haven't yet, because when I first started on my own after I left the bank, and I too went to some of these shows because I had to break away from the bank. I felt that if I traded on my own, I felt such a connection to the bank. I felt that I didn't have the confidence to do it on my own. So I actually learned with a mentor when I first left the bank. I went to the TAG at that time in Las Vegas, and I actually paid money and went and I learned with the mentor, and I actually learned from people. And I too had to understand. I didn't understand when I heard people say, what shows up in your personal life shows up in your trading life. I just did not get it. But now obviously I get it very well, and it's really true. So how do we transform from being in the technical trader's trap to a transformed entrepreneurial trader like Steve or Stacy? Okay? These traders they have a business plan. They've written out a business plan, so that means that they have goals. They know what they want to accomplish. And a business plan can incorporate things like not only how much money do you want to make, but how are you going to get there? What are the tactics that you're going to use? Like, write out your goals. Where do you want to be at the end of the year? If we were to be talking 1 year from now, what has to happen during the last 12 months for you to feel that you have been successful in achieving some of your goals? So that means coming up with a trading strategy that you're comfortable with, coming up with trading times that you're comfortable with. That means understanding the fundamentals, how to analyze the markets. What does Fed policy mean? What interest rate environment are we in? How will that affect the markets? What are the global players looking at? The markets are, pretty complicated now. And are we in a trend or a sideways market? So you have to figure out what your analysis technique is, write it down. That can form part of your business plan. And then your strategy is how you take advantage of your ideas. If you're bullish, how do you enter your trade? And then your trade plan is your specific trade that you find on a daily basis. But we're going to get more into that. So so Steve and Stacy are making money consistently. They've done their business plan. They trade with discipline. A word on discipline. I don't like the word discipline because I just don't like it. But I like thinking that I can develop habits. So I try to use the word habits instead of discipline in the book. Sometimes I slip and I do use the word discipline, but I believe that everybody has it in them to develop habits with practice. We can all do that. Because when you think about discipline, it feels like something that's ingrained. And I don't want to think that I'm either disciplined or I'm not disciplined. I can grow and I can learn by developing habits. So back to Steve and Stacy, they trade unemotionally at this point, and they have a clear trading plan. So if you want to become an entrepreneurial trader, this is the transformation process. You need to move out of the technical trader's trap and become a transformed trader. So move from the left side of the quadrant to the right side of the quadrant. And that's for new and experienced traders alike. It really doesn't matter. How many of you have been trading for more than 5 years in here? Okay, a lot of you. Anyone more than 10? Yeah? Okay. Any of you less than 1? Okay, some newbies. Okay. And less than 5, the rest of you, I guess? Yeah? Okay. So we have the gamut of traders here. If you feel that you're on the left side of the quadrant and you move to the right, that's what we're gonna help you with today. To watch my time. How long? I wonder how long I have. How long do I have? 3:15? Okay. If you hear a voice within you say you cannot paint, then by all means paint. And that voice will be silenced. Vincent van Gogh. You're here, and that's giving you the confidence to continue painting, continue trading. That's excellent, so I don't need to say anything more on that. We're starting out with habit number 5. Understand and exploit your unique trading personality. What trading style do you prefer? So we've heard a lot about this in these 3 days, I'm sure, and the 2 days so far. Short-term momentum or day trading, medium-term swing or micro trend, and long-term positions. Those are 3 different styles of trading depending on your personality and time that you have to analyze the markets. Most traders start out with short-term momentum or day trading because they can capture lots of trades and they can get experience. But you can also capture lots of trades by backtesting, and that's really a must. You need to backtest your strategy. So if we just talk about Forex, and if we say that 200 to 400 pips a month is a good month, how many of you would like to make consistently 200 to 400 pips a month in Forex, right? How many of you have been told and think that you can make and want to make 2,000 pips a month or a day? Like, oh good, you're realistic. Sometimes I get with people who say, just 200 to 400 pips a month? Yeah, try doing that consistently, right? And that says nothing about, the size of the position, because you can make a lot of money on that. But let me tell you that if you take long-term positions, now get this, long-term positions might be 1 or 2 positions in a month where you can make that money on, 200 to 400 pips. Medium-term swing or micro trend, we're talking about looking at the week. You might take 1 or 2 positions in a week. So you might be making 50 to 100 pips in a week, which translates into what? 200 to 400 pips in a month. And if you're a short-term momentum or day trader, you might be looking to make 10 or 20 pips a day. So in a week, that'll be 50 to 100 pips in a week, or 200 to 400 pips in a month. So that's sort of the ballpark that you're looking at. When you're doing your analysis on your trades, as a long-term position taker, you really only have to look at your performance at the end of every month. As a swing trader, you really should look at your performance every week, once a week. See, we're developing habits here. That's what we're doing. And as a short-term momentum or day trader, you're looking at your performance every day because you're taking lots of trades in a day. How many people get that? And how many people, is this new to anyone? If this is this new to you, or did you already know it? I guess I'm not asking a yes/no answer. I'm not. So that's how you can look at this, okay? There are many ways to styles of trading. So I grew up with discretionary trading. That's looking at a chart and deciding this is where I'm going to enter, this is where I'm going to exit. With technology, well, now we have lots of automated trading, algorithms, black boxes, high frequency trading. But we also have a combination of systematic and mechanical. No matter what it is that you do, like if you're a programmer, you're definitely going to want to systematize your trading. Look into that. And if you have no knowledge of that, you can still look into that if you want to. But I really do think that you need to know what's behind the algorithms, what's behind the black box, like before you start using it. And you need to backtest it yourself. But I'm a discretionary trader. I still am. And I still am. So that was habit number 6. Habit number 5, rather. Habit number 6 is follow a system. So both discretionary and systematic traders have systems. Successful companies have winning formulas and systems. They execute that formula or system consistently. Amazon, Microsoft, Walmart, Starbucks, they all have systems, right? Develop your own game plan or system for your trading style and temperament. So now we know that if you're working full time, maybe you want to, look at swing trading. If you're not working full time, or if you have your own business and you can manage a few hours a day, then, and if that suits your temperament, then maybe day trading. It really, depends on who you are and what you feel your personality will be best with. And that takes time to understand. Like I know some traders who can only trade on the 1-minute charts because they need to be in and out so fast, otherwise they get too nervous. Okay? Seriously. And this is, yeah. And many traders do start out like that. And what do you have to build? You have to build your muscles for taking bigger positions, and you have to build your muscles for maybe extending that 1 minute to 5 minutes. It's a conscious practice and building those muscles to be able to do it and to feel comfortable doing it. It takes time. But there are some people that can start off just taking swing trades, and that's fine for them. So it really depends on if your temperament. If you're very patient, then then maybe swing trading. Patient and you have a full-time job and you're very calm person, yeah, you might be fine with swing trading right off the bat. So the important thing is to develop confidence in yourself, to follow your system. So what are some of the components of a system? You want to know what your chart setup is. Are you going to look at naked charts, and that means with nothing on it, no indicators on it? Or are you going to dress it up with some moving averages or some oscillators? You need to figure out what your chart is going to look like. And then you might want to come up with some general rules that you can read every morning if you trade every day, or a couple times a week if you trade a couple times a week, or whatever, whenever it is you're trading, where you have a set of rules that hold true all the time, reminding you to stick to the plan, for example. So if you have a tendency of not sticking to your plan because, I don't know, you have an intuition that something is, it's going to move, but you don't plan it out, just write yourself a list of questions so that you can, almost like a checklist. Did I plan my trade? Did I do my analysis? Did I buy at the top of the market before the market pulled back? Like, these are the questions that will jog your mind so that you don't make mistakes as a discretionary trader, right? We all learn from the mistakes. The market teaches us. Sometimes those mistakes can be very costly. Trust me, I know. Entry and exit rules. What triggers the buy and sell decisions? And exits include stop losses and targets. So that forms part of the trade plan, and the trading strategy defines your trade plan, where you enter the trade. We'll look at an example. We're going to look at an example in a minute. But let me just show you, this is where the example is coming in. This is a really, I really like talking about trade management strategies. There are 4 types. 1, getting in and out all at once. 2, getting in all at once and taking profits at various levels. 3, getting into the position at various levels and getting out all at once. Or 4, getting in and out at various levels. So these strategies go from simple to more complex, and which strategy to choose is a function of the trader's experience. Now, I'm going to tell you what we use, what I use. It's number 2. Get in all at once and take profit at various levels. And I'm going to show you that right now. It's called the 3 profiteers. Do you recognize the 3 musketeers? It's funny, but I better not say this. Okay, so get in all at once and take profits at various levels. I developed this strategy to maintain balance for me on the fear and greed continuum. And for me, as a perfectionist who wanted to capture every last pip of the move. So, if you can relate to when the market moves up, you have one position, the market moves up, and you take your profits, and then it moves up more, and it moves up again, and you're sitting there saying, should I get in again? And you're kicking yourself because you got out too early, right? Or what if you take a position and the market goes in profit and you think, yay, this is a good trade. And then suddenly it turns around and it goes against you and you end up losing on that trade. Tell me that you've all experienced these 2 things. Everybody should be raising their hand. If you haven't, then you haven't traded. No. Most of you raised your hands. Okay, good. So that's what this money management strategy does. It helps you not be such, it helps you with these emotions. So this is how it works. 1, determine the potential profit area. Assume the potential profit area is 100 pips. I'm giving you an example, then I'm going to show you a live market example where you can actually set up this trade, okay? It happened last week, but I'm showing it to you this week. 2, use the Fibbo sequence. And the Fibbo sequence this is part of it, 8, 13, 21, 34, 55, 89, and 144. Take a screenshot of this if you want to try this strategy out, this trade management strategy. And pick 3 profit targets, the 3rd ending at your potential profit area, your PPA. Then you work backwards from the 100 pip. Remember we said it's 100 pips. We work backwards to determine your profit objectives. So that would be 34, 55, and 89. Then we set our stop at 34 pips. That's on the next slide. At the first profit target. And if you set a trailing stop in your trading platform, you would set a trailing stop of 34, so that when the first profit target is hit, your position moves to break even automatically. Does everybody, you follow that? Yeah. And then you move your stop to P1 once P2 is hit. And that way, you're able to capture the entire move, but you're also able to take some profits along the way so that the market doesn't move in your favor and then all the way back down again. Okay? And then the risk reward on this, and it's really the same with any 3 Fibonacci levels, ends up being 1.74. That's what it ends up being. So let's look at an example. This is gold. This is the daily chart, and you see the 4-hour, triangle pattern there I told you that we do Elliott wave analysis. That's our wavy tunnel setup. Elliott wave analysis, so between waves 3 and 4, wave 4 is the triangle consolidation. And we were targeting the end of this 5-wave sequence where that green horizontal line is. So where the green horizontal line is, we're targeting this 5-wave sequence. Also, this is a triangle pattern. So in classical technical analysis, you measure the base of the triangle or the apex of the triangle, so the widest part, and then you project it on the breakout point. And that's how I got this level. But it also coincides with our 5th wave target in our Elliott wave analysis. So that target is 1475. The trade entry is where the blue line is. So that's when the daily candle trades above the, it's a reversal candle, it trades above the prior bearish candle. 57 is the difference. Okay, and there's your triangle pattern in the upper left-hand corner. So now let's look at the numbers. Using the 3 profiteers and working backwards, the 3 profit targets are 55, 34, and 21. Does that make sense? Raise your hand if it makes sense. Yeah, it has to sink in. It's not, it has to sink in, but with practice, you'll get this, okay? So what do? We set our profit targets. We start with the entry price at 14.18, and we add 21 pips, which is the first target, 14.39, 34 pips, which is the second target, 14.52, and 55 pips, which is the third target, 14.73, which is just below our triangle objective of 14.75 and our wave 5 of that magenta wave 3. If I go back here, right? That green line, all right? So we've set our profit targets and we're happy, and our stop loss is 13.97. So this is what actually happens. The first 2 profit targets are hit. So working from the 14.18 entry price, the 14.39 is hit, the stop is moved to break even at 14.18. The second target is met at 14.52. The stop is moved to the first target at 14.39. The third target is not met, so it gets stopped out at 14.39. So you make 21 and 34 and 21 on that third position. So that's 25, an average of 25.33 dollars per position with 3 positions. Okay, that is the beauty of the 3 profiteers, because you know what happened. I mean, gold came back down again to the entry point. So what would happen if you took the position and you didn't take profits at all, and then it comes all the way back? Very frustrating. So this helps you avoid the frustration. So I really like the 3. Who likes the 3 profiteers, or understanding how you can take, 2 or 3 different positions? Very, very, very important to deal with ourselves, our heads, our psychology, right? That's what trading is about. And the day came when the risk it took to remain tight inside the bud was more painful than the risk it took to blossom. Well, it's really my hope for you, this isn't the end, that you all blossom as traders. Okay? So last habit number 7, plan the trade and trade the plan. The difference between a trading system, a trading strategy, and a trade plan. A trading system is a collection of trading strategies. So we already talked about trend markets and sideways markets. You might have a trading strategy to trade the sideways markets, and you might have a trading strategy to trade the trends. But just know that even if you are in a sideways market on the monthly or the weekly chart, when we bounce off support and resistance, you're trading the trends all the way back down to the other level. Okay? You just need to know when that trend is going to stop. The trading strategy is how you define your entries and exits based on however you look at your charts. Price action, analysis techniques, and or chart setup with indicators, right? And the trade plan is the set of rules for when a trade opportunity arises. And we just did the trade plan for that gold trade. That's a trade plan. Everybody clear on the difference? Okay, good. The path to greatness lies not only in our performance, but in the systematic practice we put into the performance. Very important to practice, 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 practice. I don't want to say practice makes perfect, because you know I'm trying to get away from perfectionist, being perfect, which I'm certainly not. Trading mastery is about internalizing patterns, rehearsing execution skills, learning from market feedback, and preparing the trade plan. And I have a trading blotter that this is just a trading blotter which just shows you across the top. We have the analysis portion, so you do your analysis, and you can set this up any way you like. If you'd like a copy of it, just send me an email, jody@fxtradersedge.com, Jody. No problem, I will send you the trading blotter. Across the middle is your actual, your checklist, so your strategy, how do you buy and sell, and then to the right is your trade plan. And you can use the 3 profiteers or whatever your trade management plan is. And then at the bottom is your post-mortem analysis. So feelings before trading, actual trade planning, and actual trade results. So it just allows you to really understand why you're taking your trades. So you're just not taking them so that you're accountable to yourself. You're accountable for the trades that you're taking. And another way to be accountable is to get yourself into a community. I'll show you a way to get into our community, or to grab a trading buddy. You're here at the show, grab a trading buddy. Some of you came with other people. Start your learning process together. Even if you're experienced and you don't feel like you're a part of a community, you know, it's really important to be around like-minded people. Trading can be a lonely business otherwise. So, trading blotter. We have just learned 3 of the 10 habits of successful traders that I teach in my book. Learning them will help you save time and effort, make more money, and achieve your full potential as a trader. Hopefully, I mean, that's my hope for you. Now, that ends this presentation, but I want to give you a way to, I don't know, maybe get some of our analysis. So we at FX Traders Edge provide Elliott Wave desk counts. So I think I told you when I traded at the bank, we had an analyst on the desk, and I modeled my business after that, where we have an Elliott Wave analyst providing wave counts every day on 16 different markets. So your personal Elliott Wave analyst and strategist. The website that you go to is elliottwavedesk.com/start. There is a little course there that you get as well. And these are the markets. This is what the service includes. You get daily videos on 6 currency pairs, the dollar pairs, Euro, Pound, Aussie, Dollar, Yen, New Zealand, and Dollar, Canada. And by the way, if you're trading crosses, and if you're trading Canada Yen, for example, or Euro, New Zealand, you can look at the analysis on the Euro, look at the analysis on the New Zealand, then sort of put it together for the cross. It doesn't always work, but you'll work with it. 10-year US bond, gold, oil, S&P, Dow, NASDAQ, Russell, DAX, Bitcoin, and Ethereum. So not all of you can take positions in these CFDs, being in the US because of the regulations, but if you're trading futures markets, you'll be able to take those positions. So daily HD video, plus the Back to Basics seminar, plus we have trade ideas that are provided through SMS or Telegram. And these trade ideas produced 3,048 pips in 2018, documented in a live trading account, and it's up a little bit more now, but 1,260 pips so far this year, but it's actually up a little bit more. Really what you can, how much money you can make, it depends on how you manage the trade, the size of your account, etc. The return that you make has to do with how you manage the trade as well, right? Because we're telling you how we're managing the trade, but you have to manage it yourself in your own account. So that's all part of the service. It's $75 a month, and these are the 4 modules that you get. Some part, that's the Back to Basics seminar, and I'd love for you to join us, to try us out. This would be your context. This would be your analysis, your top-down approach. And then if you have a strategy that you use, great, you can use your strategy to develop your trade plan and take your trades. How many of you have a trading strategy? Raise your hand. Great, that's great. So now, the message that I've already said is, if you have a trading strategy, wonderful. Use your trading strategy, really understand it well, practice it, take lots of demo trades before you go live, learn how to build your account by starting small, and consistency is really the key. And if you'd like, you can try out our service, elliottwavedesk.com/start, to give you that top-down approach, that context, that big picture view for where we think the markets are headed, and see if your strategy aligns with what we're thinking. So may you all have tremendous success in your trading businesses, and thank you so much for being here.